I want to bring in our guest, Richard Jeffrey from Cazenove. Richard, it does seem that everything really depends on what any one U.S. official says. Oh, it's good. Oh, actually, the recovery is not actually there in place. What are we going to see over the next couple of weeks? Volatility?
Well, we've got a huge number of interrelating themes at the moment and clearly a very unstable situation. I think the most acute problems at the moment can be put in terms of government finances around the world and how secure they are, and at the same time, and interrelated, of course, the strength of the recovery. And I think markets can be upset by news stories that come through on either of those fronts, and upset to quite a great extent. So we'll see a lot of volatility. And I think the overriding problem, funnily enough, is on the economics front at the moment. We've seen what everybody has sort of grabbed onto as a V-shaped recovery. But is that V-shape simply a reflection of what happened in the past? Is it actually telling us rather little about the future? And is the future for the world economy rather flatter? And I think that's the concern.
You're saying flatter, actually. What about a potential double dip? Because, of course, here's the bell.
There goes the bell.
Yeah, a potential double dip, given all the austerity measures. Germany now also the power machine in Europe, stepping forward, leading the pack, as it were, with yet an 80 billion austerity package. That will have consequences for growth. Oh,
undoubtedly. I think certainly within Europe, what we're seeing are demand trends which are quite flat at the moment. America looks a bit better. And, of course, Asia relies on America and Europe to create demand for their output growth.
Now, as Judith actually goes through the market open, Richard, let me ask you about consolidation, because we have a deal between ABB and Chloride. It does seem that actually, despite the volatility, despite the big questions on the economy, we're seeing more takeover deals.
Well, in fact, I think we're seeing quite a low level of takeover deals, and the reason that you're focusing heavily on each one is because they're not so many, and actually they're harder to get through with investor support at the moment. I don't think we're going to get into a renewed era of takeover and merger activities such as we saw during the last boom.
Let's have very quickly a look at what markets are actually doing. Indeed, Frankfurt is moving higher, just about a third of a percentage point. Also, London opened higher, and Paris by half a percentage point. So, indeed, a positive open. Looking quickly what Tesco shares are doing, they dropped below the 400 pence level, down 2%. BP and BA unchanged. Deutsche Bank gaining on a buy recommendation.
Richard, on Tesco, so the CEO is stepping down. Are we seeing more and more pressure on a lot of these CEOs to deliver or to step down?
Well, there's always pressure on every CEO to deliver, and there's pressure on everybody in the world to deliver, isn't there? So there's no different when you're at the top of a corporation.
They could get away with quite a lot.
Well, I'm not sure. Perhaps in these testing times, and there is more pressure. Obviously, Tesco's been enormously successful, and seeing the stepping down of the CEO there is bound to create some uncertainty. Tesco are going to do their best to alleviate that uncertainty by having a well-managed crossover, but it's still a step into the unknown a little bit.
What's the potential of UK companies in a greater European context? We've seen many of those European blue chips, especially based in the Eurozone, saying, oh, we'll benefit from the weaker euro. Not so much that has been the case for the UK. Tomorrow trade data will be coming out. What's your feeling? What's in store for the UK companies? Well,
it's interesting. When you talk about the UK corporate sector, of course, you're talking about huge exposure to overseas economies, because an awful lot of UK earnings and an awful lot of UK turnover, apparently of UK companies, is derived from overseas. So we're a very international economy. So far as UK trade flows are concerned, I think they've been pretty disappointing during this recovery period, and exports have not picked up, I don't think, as much as people hoped they would, or as much as they picked up in other economies, and that's a concern.
Richard, we only have 20 seconds left, but we have a poll today saying that actually investors want to be in US equities, not in the BRIC countries and not in Europe. Do you agree with that?
I think what people are seeing in the US is a degree of certainty and safety. Now, that could easily dissipate if the economy there, the recovery, proves to be fragile. But at the present time, the US economy is expected to be at the leading edge of the recovery, and that's quite important. And at the same time, of course, within Europe, you've got real problems with government finances, which apparently America hasn't got. Of course it has. They're just not being focused on at the moment.
Yeah, bond vigilantes, Mr. Rubini, saying that actually the US is next. Richard Jeffrey, thank you so much.